Imagine this. Sarah and James are sitting in a coffee shop, each with a laptop open. Both call themselves part of the market, yet their approaches couldn't be more different. Sarah is scrolling through charts, flipping between candlesticks and trend lines. Next to her, James is reading the annual report of a Fortune 500 company, sipping his coffee slowly, as if he has all the time in the world. Sarah checks her watch anxiously. "The market opens in 10 minutes, she says. James raises an eyebrow and replies, "Does it matter? I'm in this for the next 10 years. Here's the funny thing. Sarah and James are both trying to grow their money, but their methods illustrate fundamental differences between trading and investing. So, what are these differences? And more importantly, which one is right for you? Let's break it down. First, let's start with the basics. What is trading? At its core, trading is the act of buying and selling financial assets like stocks, cryptocurrencies, or commodities over a short period of time. The goal is straightforward: to profit from price fluctuations. Think hours, days, or maybe weeks. Sarah, for example, thrives on quick decisions. She looks at technical indicators, patterns in the stock charts, recent market trends, volumes, and volatility. If a stock surges up by just 5 or 10%, she sells. That's the trade. If she miscalculates and the stock tanks, she takes the loss and moves on. Traders are like surfers, riding the waves of market momentum. News headlines, economic data releases, and earnings reports, they're constantly scanning for opportunities. But here's the catch. Trading demands time, focus, and a tolerance for high speed and high risk. One wrong move or a single piece of bad news can drain your profits faster than you can hit sell. Investing, on the other hand, is more like planting a tree. You put down roots in assets you believe will grow over time. James is a great example. He's a long-term investor. He's not trying to time the next move or predict tomorrow's price chart. Instead, he's focused on the fundamentals. What's the company's business strategy? Is its market share expanding? Does it generate consistent revenue? If Sarah is all about speed, James is all about patience. His goal is to hold on to his investments for years, even decades, to benefit from long-term appreciation and often dividends. Investors don't panic when the market dips. If anything, they see downturns as an opportunity to buy more of what they believe in, like a Black Friday sale on stocks. For James, the daily ups and downs of the market are noise. He cares about the forest, not the individual trees. Now, here's the million-dollar question. Which one is better for you, investing or trading? Here's the truth, it depends. Let me walk you through some key factors to help you figure it out. What are you trying to achieve? Are you looking for quick profits or long-term wealth building? Trading may appeal if you're chasing dynamic short-term opportunities, especially if you love the adrenaline rush of timing the market. But remember, it's not guaranteed money. More like attempting to hit a target at a carnival game. You can win big, but it's also easy to miss. If you're looking to grow your wealth steadily over time, with goals like retirement or funding your children's college education, investing might be your better bet. Investments compound over time, like a snowball rolling downhill. It's slower, yes, but with patience, your returns can multiply. Your risk tolerance. Let's not sugarcoat it. Trading comes with higher risks. When you're trading stocks, your goal is to predict what will happen in the short term. A notoriously difficult game, even for professionals with years of experience. If you're the kind of person who loses sleep over seeing your portfolio drop 10% in a day, trading might not be your best fit. Investing, particularly in a diversified portfolio, comes with less immediate stress. Yes, there are risks, markets can crash, and not all companies succeed, but time is your ally. Historically, financial markets tend to go up over the long run. Investors weather storms knowing their focus is the bigger picture. Trading is practically a part-time or full-time job. If you're analyzing charts, watching tickers, or following breaking news to get an edge, it consumes hours of your day. Sarah, for instance, starts early in the morning and ends late at night, tracking global stocks and staying ahead of market sentiment. Investing, on the other hand, is more forgiving time-wise. Once you've done your research and built a portfolio, the day-to-day management takes far less attention. James reviews his stocks once a quarter, maybe more if something major happens, Otherwise, he sets it and forgets it, letting compounding do its magic. One thing both traders and investors will tell you: successful money management requires emotional discipline. That's easier said than done. Imagine Sarah, who sells a stock too soon because she can't decide if the price might keep climbing. Or worse, holds on to a losing trade, letting her emotions get the best of her judgment. James, while more insulated from the daily roller coaster, faces his own challenges. Sometimes markets stay flat for years, or worse, they sink. Long-term investing requires willpower to hold steady when everyone around you is panicking. But because his decisions aren't made in the heat of the moment, James tends to avoid rash moves. Here's a key takeaway: trading rewards decisiveness, investing rewards patience. Your knowledge and resources. Let's face it, trading isn't for everyone. Understanding how to read stock patterns, analyze technical indicators, and react quickly to market changes takes skill and practice. Many traders spend years honing their craft. If you're not ready to dedicate yourself both financially and mentally, trading could cost you more than you'd like. Investing, while still requiring knowledge, is generally more beginner-friendly. With the rise of diversified options like index funds and robo-advisors, getting started is simpler than ever. You don't have to pick individual stocks if you don't want to. There are plenty of tools to grow your money without extensive know-how. But what if you're not ready to commit to being one or the other? Can you do both? The answer is yes. Many people strike a balance between trading and investing. They might allocate a smaller portion of their portfolio, say 10%, to trading for the thrill and the potential for quicker gains, while putting the bulk into long-term, stable investments. At the end of the day, there's no one-size-fits-all approach. What works for Sarah may not work for James, and vice versa. But here's something they both agree on: the sooner you start, the more opportunities you'll have to grow your wealth. So ask yourself, are you Sarah, monitoring the waves, ready to catch the next big opportunity? Or are you James, planting the seeds of wealth and waiting for them to grow? Maybe you're a little bit of both. Remember this: whether you trade or invest, the most important thing is to stay informed, stay disciplined, and stay focused on your goals. The markets will always fluctuate, but your strategy should remain steady. Because in the long run, the best decision you can make is the one that aligns with you. So, how will you grow your money?